Yo, 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 yo. Such good music. Okay. Hey, good morning. How are you? Let's see if I can get better music. Yeah. Ba 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 ba. Ba 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 ba. Hey, welcome to Forex.Today. Yeah. All right, well, let's get going. Let's go! Welcome to Forex.Today, the YouTube community of more than 21,000, almost 22,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But cheer up! Stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Bada bing, bada boom. Dude, what's going on today? Anyways, it looks like drone footage. I guess my chair is low today, huh? But anyways, good to see you. Welcome to my home office. That's my 400 million year old fossil. Yeah. Although a friend of mine believes the Earth is 5,000 years old, I think. I'm like, cool. So who knows, huh? So anyways, what's going on? You want to do some trading? Yeah. Well, we got news that has come out. You probably saw retail sales. Tomorrow we have unemployment, jobs Wednesday. So I'll have to send you an email out for that because on Friday I did trade non-farm payrolls live, and now we got to do non-farm payrolls live, which is usually Friday, but now it's a Wednesday. Blah, blah, blah. So that gets interesting, but whatever. Life's, well, you know, an interesting life is a blessing. So your life has been blessed. We'll do some, so we'll go through that. We'll look at market sentiment. We'll look at some technicals. We'll do some fundamentals. Also introduce you to some new layouts, some new features, some progress on some updates going on at traders.com. But life is great. Life is good. Life is beautiful. So TRADARS is a partnership between, me and Traders Way, in the sense that I built TRADARS because this is me. TRADARS is a clone of me, which is really strange. I'm loving it and terrified of it more and more because it quite literally is what I think, both technically and fundamentally. And I've been coaching how to coach. I've been coaching it how to do fundamentals. I've been coaching it how to do technicals. Oh my God, it's good. So anyways, and then if you, we're going to introduce a new program where if you trade and execute through our trading partners, you'll get a rebate for your subscription fee. So that TRADARS is essentially cheap or free for you. How about that? Yeah. So taking a look here at the spike alert. We have news coming up tomorrow. We'll cover this in a second. Aiden, yesterday when I was working with him to prepare for this spike alert, he misunderstood, and instead of downloading 50 months of data into our database and then analyze it, he accidentally did 50 years. So we had basically non-farm payrolls data. We pull unemployment rate out of NFP, right? He did 50 years. 50 years. So he's like, 1975, this is the unemployment rate. I'm like, whoa. Probably not necessary. And if you're a statistician, if you've studied statistics, you know you need a sample size of 30. More than 30 is great, but at some point there's diminishing returns. You don't need 30,000, but 30 or more. And so we agreed to pull 50 months, not 50 years, 50 months. And that's more than enough of a sample size to get accuracy of how much will this move the market. And we are identifying it as a extreme spike. Now, this is cool. I love it. It's so good. What I thought about doing is sending you an email as well, like maybe 12 hours before it comes out, and give you all the analytics so that you're ready and prepared for the news event without even having to log. And we tell you way more than it's important. The level of analytics that we have in our spike radar is second to ECB policy rate seen steady through 2027, Danske Bank. U.S. stock market futures point to a flat open, but there are some market movers.
Copper, China demand and Shanghai speculation. Commerzbank. Euro, U.S. dollar price forecast. Buyers on pause, but holding the grip. U.S. ADP employment change. 4-week average declines for third week to 6.5K.
U.S. retail sales remain unchanged at $735 billion in December.
Economic data to drive U.S. dollar moves. BOFA Securities.
U.S. dollar growth hopes, AI boom, and Fed signals. Rabobank. Dollar may fall 10% this year if Fed cuts more than expected, says strategist. Yeah, cool. So that's all the headlines that have come out in just the last few minutes. The idea here with our Squawk Box, what we call a headline radar, is you just run this as you're trading. Just run in the background. You can just stare at your charts all day and hear the news. Hey, trader, have you heard the news? So you just open it up here, and then you can minimize it. If you'd rather watch TV, you can also do that, and then just minimize the page and just listen as you go through your charts. Something like this usually is $100 a month. It's free at traders.com. Because I love you. You're my sweet baby. Let's get a sit rep. Loading. Oh, you sons of guns. There you go. A little slow. Aiden's intelligence. I'm seeing a subtle shift to risk sentiment today. Ooh, a subtle risk in risk sentiment today. Okay, with the current risk score of basically 0, reflecting a decrease from a risk on yesterday, 1.92. This correlates closely with the drop in the U.S. 10-year yield, which fell by 1.07% since yesterday. That is a huge move. So we'll have to look at the bond radar, because that's where Aiden got this information. Consequently, influencing Forex movements and dampening risk appetite. Yeah. So indices and commodities are going to be flat because money seems to be going into treasuries and bonds. Not really a risk on kind of scenario, huh? And this is where you can eyeball. Yeah. So we've dropped very significantly since yesterday. So yesterday was a good day, and we can't quantify that continued goodness. Maybe it'll happen later, or maybe after Wednesday's unemployment rate release. But what we know now is not now. The goal here is that every single trade and investment you make is based on logic and intelligence. Imagine how confident you're going to feel when you understand what's going on and then make your trades. You don't want to say, well, MACD told me. You probably don't even know your MACD settings if you think that way. Oh, Wayne, it's 6/12/14. Like the default settings on MACD are so stupid. So if you just pop on a MACD and you just leave the default settings, oh my God. Fail. So anyways, whatever. We'll get off that. Is anything, I want to show you this. We update our correlation matrix. How pretty is that? There's the main things that we're interested in. There's a correlation in the stock market. There's the correlation in the bond market. There's the correlation in the commodity market. There's the correlation in the Forex market. And there's the correlation in the crypto market. Dude, shut the back door so you know how these markets will trade, huh? Yeah. So what happens if VIX is way down? The stock market goes up. Cool. See? But we track that for everything. Look how uncorrelated gold is to the S&P 500. Would not have known that. So anyway, so we updated that. That's pretty sweet. And of course, we have our day and swing trader radars to help you see what's hot and what's not. Okay, very cool. I prefer swinging it. You know, I'm a swing trader, Bubba. Okay, and so what it changes is the point of view on the time frame for changes in asset prices, but also changes in the fund. Nothing going on today. Yeah, let me show you the spike radar. This is really good. So this is for tomorrow. Okay, it's for tomorrow. So, how much is euro dollar going to move tomorrow? Well, we don't know. The previous unemployment rate is listed at 4.1. Is it expected to be 4.1? Is that what it's going to be? No, probably. But maybe. Well, what's the probability it's going to be the same? What's the probability it's going to be higher? What's the probability it's going to be lower? And when the meet, beat, or miss happens, how much does it change the expected volatility? These are all good questions, so we have the answers right here. Yeah. Biggest mover is NASDAQ, followed by Aussie dollar. Cool. So that's right off the bat. And how do we get that data? Well, we looked at January 10th, December 6th, November 1st, October 4th, September 6th, August the 2nd, July the 5th, June the 7th, May the 3rd. Whoa, 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 whoa. We're in the middle of 2022. Whoa, whoa, whoa. So March 4th, there was a miss, and that created Aussie dollar up 31 pips. Here's the chart. You see? So having looked at 50 non-farm payrolls, and specifically the meat, miss, or beat of every one of these over 50 months, okay, we have a good data set. We can then say, well, what happened every time it see, there's beat, 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 miss. Okay. What direction did it go and by how much? Meet, meet, beat, 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 met. Okay, here's a met. How much did it move 1 hour after that release came out? The month before also met. Well, how much did it move in the 1 hour? And for all the major assets that are related to this news event. So it's doing this for multiple assets, like a dozen assets, calculating the pip change and then organizing them. So it's an incredible amount of data. And now we can say the past performance does not predict future results. However, when you look at Aussie dollar and you look at how often there was a beat, a meet, and a miss, and then you break all those calculations down independently and say, well, what's the average move for all the beats? What's the average move for all the meets? What's the average of all the misses? And what direction for just Aussie dollar? Now, we did it for all these other assets too, but this seems to be worth our attention as Forex traders. Well, of the 50 events in the past, 17 have been beats. So 34% of the time, unemployment surprises to the upside. Cool. 53% of those, right? 53% of the 34% made the market drop. Euro Aussie dollar drop. And then when you average that out, it dropped by 14 pips. So even then I'd look at this and say, well, a beat isn't very reliable on Aussie dollar because half the time when it went up and half the time it went down. And if I don't have an edge, then it's not useful. So I don't even want a beat. Or at least I know if there's an opportunity or a threat coming, if it is a beat. Okay. Now, 11 times out of 50, it came out as expected. 73% of the time, Aussie dollar dropped, and by an average drop of 25 pips. So you're like, okay, all right, so if it comes up 4.1 tomorrow, I'll probably look to sell Aussie dollar and pick up 25 pips. So it might be a half-decent little scalp, but it's not a big threat for those that are in longer-term positions in Aussie dollar. Probably ain't going to hurt you or help you statistically that much if you're going after 300 pips. You know, this is just a little dip and then continue mission. Right? And now 22 out of 50 events, okay, 44% of the time, we have lower than expected. And when that happened, 64% of the time, Aussie dollar went up. And when it went up, it averaged 23. But notice like 1/3 of the time it went down. So in this case, if you said, well, sort of like a Sortino ratio, don't look at the good vol, only look at the bad vol kind of thing. You might say, well, when it is up on the reliability side, it probably goes more than that. But that would be the average, including the 1/3 of the time when it goes down. If you said, well, only show me the 2/3 of the time it went up, probably went up higher than 23. Like statistically, you'd have to be able to understand that. So you're like, this might be worth 35 pips tomorrow, but only on a miss. And high probability of up in that case. And of course, we have this for NASDAQ and pound dollar and S&P 500. And, you know, there's your euro dollar. So we've done all this analysis over and over and over and over and over and over and over again. So you know, is it a threat or an opportunity? By how much? Should you be concerned or not concerned? And what direction does each of these tend to move the market? And then we have the historic Price. Hey, that's pretty good. And so instead of having a calendar, I don't like calling this a calendar. It's a spike alert. And I think what I'd like to do now is maybe 12 hours before it comes out, email this whole analysis to you, or a variation, to say, hey, this might move 50 pips tomorrow on NASDAQ. In this case, points. Yeah. And we consider that extreme. When you look at the schedule, we organize it by the expected or implied volatility based around the news event itself. So you'll have extreme, you'll have moderate, and you'll have low risk spike, or low risk of a spike. What do you think? Is this good? I built it for us. Yeah. I'll remind you, this is on the free section of traders.com. I think I could sell it to you. Huh? It's worth money, don't you think? Hang on, I got to yell at you. All right. All right. Where are we? Yeah. Oh, you know what? Hang on. I need one more thing. I can't see the chat. Where'd the chat go? Chat disappeared on me. Let's do this. Let me bring it up. YouTube.com/Forex.Today. And I'll click. I can't see the chat. There it is. Good to see you. Thank you for the thumbs up. I appreciate that. Okay. Yeah, what am I trading? Got some yens, and I got my Euro ZAR. I'm up 1,222 pips. So Hope says, I was wondering how accurate these reports are. Well, it's all quantitative. So when I tell you Aussie dollar moved 17 pips on the news when it was released 17 months ago, what we do is we know it's on the calendar. Okay. So we know the time and the date of the release. And then we get the data that says, look at the 1 minute candle from 8:30 in the morning to 9:30 in the morning. So 1 hour. And calculate minute by minute the change in price, because we also draw the chart. The change in price. And we do it not just for the 17th month, but for all the months, and not just on Aussie dollar, all the pairs that we expect would move, like Australian news releases would focus heavily on Australian currency pairs and ASX, for example. And it is precisely accurate. Yeah, precise. Okay, let's take a look at dollar pairs. I'll show you there's two ways of doing this. Okay, let's take a look. Dollar strong, dollar flat against the yen. Dollar strong, dollar strong, dollar strong, dollar strong. Okay, looks like the dollar's strong. Let's look at all the yen pairs. Okay, flat, flat. Yen strong, yen strong, yen strong, yen strong. Looks like the yen is strong today. So what we're doing is relative strength exercises. Okay. Now, let's take a look. Swissy weak, Swissy flat. Swissy strong, Swissy strong, Swissy strong, Swissy strong, Swissy strong. What do I mean by relative strength? Well, Swissy is strong, but the dollar is even stronger. Swissy is strong, but yen is just as strong. So dollar, yen, and Swissy are all strong, indicative of our risk-off environment, which we already looked at. Now, why did I add the correlation metrics? Because when you see risk off, you should know what to trade. Like, for example, if the market is risk off, then our correlation matrix would say high probability of cryptocurrencies being down. All right, well, let's test that hypothesis of what's actually happening. Down, 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 down. So if it takes you more than 5 to 10 seconds to come up with that, you're too slow or you don't know what you're doing. So if it's that easy, you're like, oh, risk off. And by the way, correlations constantly change, but they don't change very much very fast. So it's like you should know this. I mean, you should know this. You should know this. If you're even going to think of trading cryptocurrency, you can't possibly do it without knowing whether the global markets are risk on or risk off or neutral. You just can't. So check it out. Bitcoin down on 3 time frames. The 3 time frames being long term, medium term, short term. So what does that mean? Buy? No, you can't buy that. But I think Bitcoin's going to $2 million. Okay, maybe you're right. But this isn't fundamentals. This isn't analyzing the market value of Bitcoin. It's measuring, okay, where's my drawing tool? What's it called? Yeah, should be here. I just don't see it. Okay, there it is. All right, so let me give you the secret sauce because, or maybe it actually is there already. Okay, yeah. So this is what I taught Aiden. Okay, simple enough, right? And so that's what he's doing. And you're like, Wayne, I'm not so sure. Okay. What you do is you break this into axes. Okay. And the formula is y equals mx plus b. And yes, I had to literally do this with Aiden. And so you can think of the y and the x as these axes. Okay, B is the intercept. So we on three different measures. So now you have to measure three different things. He just does it all at once. And you get, they all happen, based on how I drew this, they all happen to be intercepting roughly around here. Okay, you can see there's an intercept here and all that. But it tells you where on the graph you are, where on the map, if it's easier to understand, and what direction you have been going. If you stay going in that direction, where will you end up? That's kind of what it's doing. M is then the slope, okay, the rise over the run of each of these. And they're all negative integers, so you get this, negative 304, negative 286, negative 100. So they have all different slopes. And then you want to calculate the variance and then standardize it, and this is all standard deviations. So what it tells you is, in simple terms, we're going to end up somewhere here and here in the future. Okay? So at the very least here, at the very worst here, if it starts to come around and flatten out. Now, why would it come around, flatten out? Oh, weekly, monthly pivot points, whatever, psychological level. But what this is, it's not trying to understand why a reversal may or may not happen. That's your job, and that's what technical analysis is. This is statistical analysis. So what we're saying here is based on past performance, it's not predicting, it's only explaining that there's a high probability of maintaining price at that floor. So if you were a bull, it would be an extraordinary gamble for you to bet long. At the very least, if you're right and you've done proper technical analysis and you're like, well, I think we have a price support level, I think we have a psych level, I think we have a pivot level, I think we have whatever below us. We're at a Fibonacci. Oh, this is, the completion of a 5 wave. Fine, dude, fine. That's okay. All of it's hypotheses, though. Hypotheses meaning an unsubstantiated guess or bet. So at the very least, if you thought all of that, at the very least, just drop into the scalp and understand you might be right, but you're not right now. There's no way statistically this is bullish. So you can say, well, I'll just wait till this turns gray or green. Yeah. Cool. But don't forget the fact, current market conditions are terrible right now. It's not crazy risk off, but it's definitely not risk on. We lost almost 2 points off of yesterday's bullishness. So maybe it becomes risk on later today. Well, this will turn green and you can get serious again. But it's not happening now, and maybe the markets are drying up because we got non-farm payrolls tomorrow. Yeah, well, that would make sense. But the thing is, we know for a fact what's going on with Bitcoin. And Ethereum. And you're like, Wayne, I liked it when it was all 3 time frames. So it remembers. Okay, so now we can go to Binance. Ripple. Hey, Wayne, what do you think about Ripple? Down. Okay, Solana down. Cardano down. Doge down. And so I think if I were me, especially in risk-off scenarios, I'd look for opportunities to sell rallies on crypto. But if things turn risk on, I would look for changes in trend back to the upside. Cool. There's the S&P 500. How do you feel about that? It terrifies me. Nothing but red, bro. Nothing but red. Cool tool, huh? Look at nat gas. Ha! Wah, wah, wah. Gold! Wah, wah, wah. Yeah. Although that doesn't look correct, does it? I see it. See, you gotta double check everything. That does not look correct. The price is 50.77, and this is still not updated. Okay, I'll put that on the to-do list. In fact, I'll do it right now. Let me document this, and I could even okay. I'm gonna document this. Hang on. I got this, bro. I got this. Don't worry. And I think the price is correct, right? 50.77 sounds right. So I think it's the chart hasn't updated. All right. All right. We're already working on it. Cool. Let's do some charts. Let's see swing trading. Tuesday. Oh, yeah, I forgot. No, we'll do day trading. Okay. This is going to be great because this does proper day trading. I taught it exactly how to trade. This is not some stupid chat GPT. Okay. This is what I think. And it's so great because I look at it. So let's say I look at the chart first. Don't mind what's here. I'm like, pass, pass. Yeah, maybe. Maybe a dip, but not quite yet. Um, maybe sell a rip, but not quite yet. Maybe buy a dip, not quite yet. Okay, great. So what did Aiden tell us? Well, fundamentally up, fundamentally down. That's weird. Fundamentally down, fundamentally up, fundamentally down, fundamentally up. So what is that? Dollar weakness, dollar weakness, dollar weakness, dollar weakness, dollar strength, dollar weakness. So dollar weak, pound even weaker. That's all fundamentals. Okay, there's a lot going on there, but we see dollar weak and pound weak. Great. Then I look at the charts again. I'm like, yeah, okay, buying a dip makes sense, but this doesn't look good to me. We're not really making higher highs. This might become a higher low, but I can't quite tell. And statistically, going back to that trend radar, we have a negative slope right now, or at least projection. So these are leading indicators. And it's like, not so sure. So I look at all this, I'm like, I get it, but not now. I'm not interested now. And then I'm like, son of a gun, we're neutral. But that's exactly what I think. And then I'm like, yeah, I could sell this, but I'm not. Oh my God, it's neutral. Bear, yeah, if I were me, I could sell a rip. We've already hit the extreme target for the day. For today, Tuesday is going to be the day that I'm going to give back to you, right? We've hit our extreme target for Tuesday. So in my mind, it's done, but we are bearish. And you'd want to sell a rally, probably up around the moving averages. And bearish bias, yep. Projected down, yep. A small pullback, likely, yep. So I look at that, and that's exactly what I would think if I was me, but I'd like it to come up right about here, and then I'd look to get short, and then you can eyeball the price on that. Okay, this bullish, I get it. So I want to buy a dip. Is it a good time to buy a dip now? No. We have a slight bullish linear projection to the upside. So yeah, but there's been a lot of vol in the past, and I can tell by the size of the projection cone. So we need a better higher high, higher low, higher high process. So we got a 2155 cross, but look at the angle and separation before that. So it's like, yeah, but not quite now. Well, that's exactly what I think. Thank you, Aiden. Okay, what does Aiden think? Sell this? Gotcha. But he's neutral. It's fallen a lot without a pullback in a while. Probably needs to get up here and drop it like it's hot and make a proper lower high, lower low setup. And then he's probably going to be bearish. And that's exactly what I would think. Linear projection is still to be down. So you go worst case, best case. And if you need me to draw it for you, instead of you eyeballing it, it looks like this. There's your worst case. So up to that price, which is probably where these are going to land, right? And then you go to that. So this is going to collide and then get a different blue. And then this is going to collide somewhere in here. So you have that 2155 off the, and by the way, this is all plotted automatically based on fundamental bias. It's technical training and moving averages, price action, pivot points, MACD, and confluence of these things on multiple time frames. He's doing all of this. And then we do this statistical analysis, which is just this arrow. Here's our base case scenario. So based on statistics, not opinion, not interpretation, just statistically. And so when you line those three up, what I see is this. And Aiden is doing all of that. All of it. It's extraordinary. Your chat GPT cannot do this. It's chat GPT is loaded with a bunch of nonsense that it ripped off from the internet. Wayne doesn't like her. Well, it'd be one of these things, right? It'd be one of these things. It's more like, I trust Aiden because Aiden is doing what I would do for you. And I didn't want to call it Wayne or Wayne Jr., mini Wayne. So Aiden, right? And so I don't know what Chatty or ChatGPT or Anthropic, I've played with all these things. I've used all these things. I've even coded on these things. But I don't know how it comes up with its responses. And most of the time, it's such generic nonsense that it becomes nearly or totally worthless to me, in my humble opinion. When I talk to Aiden, he speaks Wayne. And so that's all I can promise you is inside of TRADARS, there is someone with multiple degrees in economics, right? There's a brain in there that has been watching charts for 100,000 hours over the last 25 years, right? Like, I see it, I know it. It's what I think, it's how I work. And so whether you love that or hate that, that is real. It's virtual Wayne. And it's stunning for me being Wayne to be able to say, "Oh my God." Yeah. So we're moving closer and closer and closer for Aiden to do 100% of my grunt work automatically, and I can focus on just doing amazing for us. Amazing. Again, think of it. Every trade you make is based on logic and intelligence. how are you going to feel with trading like that? So should always check if the trend radar update or like, yeah. But the trend is irrelevant know until you know what you want to do. That's why we have a whole fundamental section. Or if you're going to be shorter term, at least just go through the the various radars that are showing you like dollar strong today. Okay, so should you buy some dollar? And then you can go to the trend, and then you can say, well, I'm interested in the shortest trend, and you want to sell high, so you want to sell pullbacks, and yeah, you could use it then. Will it tell you what to do? It kind of does, and it kind of doesn't. But when you use the trend radar, it's not doing any technical analysis and it's not doing any fundamental analysis. Okay. So but it is real. It is y equals mx plus b, and then you calculate the variance from the slope of the mean, and then you standardize the deviation by taking the square root of the variance. And like, it's all just math based on what is actually happening on 3 different times. So if you didn't do fundamentals, would that be helpful? I think it would be, actually. I think it would. I think it could help you wait to time your entries so that they're not guesswork. Hmm. These are all shorter time observations. So what would I do here? I'm only looking at it. I'm not looking at what Aidan's saying. I'm like, I'd probably pass. Why? We're braiding and projecting flat. Neutral. Okay. See, I don't even have to look at the chart because I'm like, yeah, that's totally what I think. Now, here's the interesting thing. I disagree with Aidan. And so I literally take time out of my day. And when I notice things like this, I teach Aidan. And I say, okay, well, you say neutral here, but I see 21 above the 55. I can just see that MACD is above the histogram by quite a bit. It had tried to cross back down, but now is crossing back up. So all of that MACD and moving average analytics, I would say, would be bullish. I'm looking at the positive slope of the linear projection, and that's positive. We're fundamentally positive. Like, what more do you need? Why are you neutral? I would be a bull here. Okay? This is what I would do if I was me. There's the base case, there's the best case. And since we're at New York Open, something like that, right? So why? And am I missing something? I don't know. I have to talk to him. And I can have a conversation with Aidan, which is really cool, right? And then I'm like, no, 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 no. You should favor this slope in this situation. But he's saying, well, you barely had any higher highs. We might have had some some lower lows. Linear projection is positive, but not very much, that kind of stuff. And he might argue against it. But I would be bullish. So, yeah. So I'll have to have a conversation. How cool, right? So let's get an update on the headlines one more time. Denmark inflation slide boosts households. Nordea. Gold lacks follow through above $5,000 despite supportive macro backdrop.
Production at Codelco's El Teniente mine to remain at lower level next 5 years, executive says. United States business inventories registered at 0.1%, below expectations, 0.2%, in November.
U.S. November business inventories plus 0.1% versus plus 0.2% expected.
Euro, no K. Inflation surprise challenges rate cut hopes, Societe Generale.
Euro pound climbs amid euro rebound, UK political concerns. U.S. retail sales unexpectedly unchanged in December. So having gone through and done our relative strength exercise, we have already identified that euro is strong and pound is weak. And look, euro pound is on the climb. Makes sense to me.
AI crypto update. Banker coin, Pippin surge as sector market cap steadies above 12 beer.
Ooh. Okay, so maybe that's an indication that the cryptos are going to maybe stabilize today and maybe try to head back up. If they're heading up, the correlation is high. Maybe they all head up. So you want to keep an eye on the risk radar. You probably want to keep an eye on crypto throughout the site, if that's what you trade. If you love crypto as much as I love crypto, I mean, you have the tools now to do it at an extremely highly competitive rate. So, by the way, this is free. Did you know that? This is free. These are free. This is free. This is free. This is free. This is free. All this is free at traders.com. So feel free to swing by. You can hang out and chat with people. You can listen to the news stream. You could watch TV. Okay. Like I said, what you do is you can just leave this squawk box running and minimize your charts. And minimize the page. And as you go through your day trading, doing your business, you'll get updated as the news comes out. Cool. So anyways, thank you, everybody. Thank you, Traders Way. I hope you swing by and hang out with us at TRADARS.com, Raiders for Traders. Peace on earth. May the pips be with you. May your profits be above average.